welcome everyone. Just to repeat again, it's the first webinar for 2026, tokenization in the US, brought to you by DigiShares. We're going to have a number of webinars coming up in 2026, so stay tuned to the socials and you'll see what other topics are coming up this year. I'm Mark Mariampillai, your host and moderator for today. I'm Commercial Director at Valereum PLC and also CEO of Takuti, my own blockchain consultancy. Look, quick intro today. Unfortunately, Claus, Skaaning, CEO of DigiShares, is unavailable. He is actually really sick, but we have Phil here as ever, and very, very, very good to have him on board from DigiShares BD. So he'll jump in for all things DigiShares today. I think a couple of updates, and feel free if I miss anything from a DigiShares perspective, is DigiShares won the Next Gen Innovation Awards over in Dubai at the Global Prop Tech and Contech Awards earlier this month. That's a great award to win, and shows they are the leaders in SaaS white label tokenization platform engines. Another news item for DigiShares this last month, they went live with Injective, is an EVM layer 1 plus Cosmos out in New York City in the US, quite permanent for this conversation today about the US. Also, another blockchain called Integra. They focus on real estate tokenization. We integrated them at DigiShares just literally, I believe, in the last few days. They went live. And also, DigiShares continues to do some great seminars out in Dubai in conjunction with DAOsub. Plenty of panelists on there for you guys. If you're local in Dubai, UAE, sign up for one of those events in the future. Phil, did I leave anything out from a DigiShares perspective?
No, you did a great job. And just like you've got your American shirt on, and I've got my awesome camouflage shirt on. Hopefully everyone can see me, and everyone's having a great start to their day. Yeah, you hit all the majors, and we're excited to have the panel today for this talk.
Awesome. Thanks, Phil. Great to have you on board today. Right. So what we're going to do is we're going to go through some individual presentations, and I'll go through the panelists shortly. We'll then have a panel discussion and Q&A session. So everyone out there in the audience, I know there is, let's see how many there are of you. There's at least 63 of you, and it's climbing. Now, please put in any questions you got there in the Q&A channel, not the chat channel. I'll be able to go through it, and my team will be able to go through it, and we'll be able to ask these questions to the panel as it comes up. So, don't be shy. I'll try and get through as many as I can. I've got a number of questions to these panelists anyway as we go through, but really want to get the audience involved. So feel free and shout there if you can. Well, don't shout, but please leave your questions there. And then we'll wrap up at the end as well. So today on the panelist, we've got Jason Barraza, institutional BD lead at RedStone. We've got Roza, Akopyan, Angelo, Casartelli, and SGM Digital Asset, and Andy Lowenthai at TokenShare. And apologies, Roza comes from TokenLand there. So those are panelists today. I'm going to go through and do individual presentations and let them introduce yourself. So look, I'm really happy all of you were able to join today. Appreciate you taking out your time. Really excited to learn more about the companies and projects that you represent and find out more about tokenization in the US. So first up will be Jason. Over to you, Jason.
Oh, fantastic. Thank you for having me. It's a pleasure to be back at DigiShares webinar, and I've been involved in some of them before, and it's always a great conversation with great partners that they're working with. So appreciate you having me back. I don't have a presentation, but happy to talk a little bit about data oracles, a little bit of background on our relationship to with DigiShares. My background, I started at STM.co, which is a data aggregator, kind of like RW.xyz or Yahoo Finance for tokenized securities, right? That was recently acquired by RedStone about a month ago, alongside our Tokenize This conference, which is a more institutional event. Along that time, I've had the pleasure of moderating some of these conversations. It's a pleasure to be back as panelist this time. RedStone, for anyone that's unaware, is a top 3 oracle. We're the fastest growing oracle in the space, and our job is to deliver prices, net asset values, proof of reserves, and any other data type feed to the blockchain for smart contracts to be able to basically execute, right? Whether it's vaults or it could be, for a specific individual asset and so forth. Right now, we're deployed on over 110 chains, supporting over 1,300 assets across up to 170 clients, including securitized as BUIDL with BlackRock, Accred with Apollo, and a lot of other RWAs as well. Beyond those assets, though, we also did acquire last year a company called Corridora, which does DeFi ratings. The idea here is that we want to measure risk because there are new type of attributes that are introduced when you have tokenization technology, as well as those that are behind these assets issued. So we do tend to do three-layer stack of ratings where we rate the asset level, individual isolated markets, and then at the vault level, where each one of those also, again, brings in other factors into consideration for that rating that pairs well with what you're mostly traditionally used to, which is your S&P, Moody's, and Fitch ratings on an A through D scale. So I just spilled a lot here on RedStone, but that's a general overview on us, and I'm happy to, answer any questions that I can from an institutional front, U.S. markets, or as an Oracle. Thanks for having me.
Thanks, Jason. So really, RedStone are taking it really one step further in the institutional land. Just as you mentioned with the ratings there, it's really bringing that into digital assets land in terms of what you guys do.
Indeed. We're really building ourselves to be here, the intelligence layer for asset management and on-chain finance in general. And part of that is risk assessments, risk management, right? Especially as a lot of assets, they do enter secondary market trading, but we also see a lot of vault activity starting to increase, especially for RWAs.
Definitely. It's what we need in the RWA sector. And as we move from the infinity over to, as you mentioned, secondary trading, it's coming. And entities like yourself are already paving the way so we can get the info in there. Well, thank you, Jason. Much appreciated. That was really interesting. Roza, over to you now.
Second. Yeah, hi everyone. I'm Roza Akopyan. I represent TokenLand here. We just recently started working with DigiShares too, and just this month we just launched our first project for real estate tokenization. So a little bit about my background is I come from traditional finance and a small business development, and that's really what has built my view on how the tokenization should work. In TokenLand, we really don't start from blockchain. Our main goal and the first real question that we ask is would the asset that we're trying to tokenize really work in the US market, from the legal and the financial perspective. So that is our main core. And, TokenLand is focused on enabling the global participation for real estate, in real estate income generating tokens through ERC 1400. And the way we're structured is through the standalone SPVs and the LLCs. I know in United States, regulation may seem crazy. They're very complex, but we are happy, to be able to participate in this market. We're participating right now through Regulation D for accredited investors and Regulation S for international investors. And we are looking into building pathways for Regulation A to even expand broader access for investors to be able to tokenize into real estate. So yeah, that is what we're building right now through DigiShares. Thinks it's a great platform that basically enables all the blockchain and smart contracts, make it so easy for us. The tokenization comes into play here, making a lot of things automated. So we're really grateful and thank you. I'm glad to answer any questions you guys have.
Awesome. Thank you, Roza. Thanks for giving us the overview and, welcome to DigiShares. And I know you've got Phil out there in the US.
Yeah, we're very excited. Thank you.
It's great to have you on board and to learn about TokenLand. Look forward to you bringing issuers and investors on board and seeing how it progresses in the coming years.
Yes.
Great stuff. Okay, so next up we've got Angelo over there, I believe in Florida today. Definitely all based out in the US. And by the way, I am in the Americas, but I'm not in the US, but I've got this T-shirt on today, but I'm down in El Salvador, especially for this seminar. But Angelo, over to you.
Thank you very much. And thank you for inviting me here. I'm Angelo Casartelli, and I manage SGM Digital Asset and SGF, Sunrise Group Fund. So I separate the two units, and today we speak about SGM Digital Asset, that is the digital company that just joined DigiShares a couple of months ago and still in development. And I'm focused in the first period with the DigiShare on the yachts industry tokenization and the yachts, single yachts tokenization or fleet of yachts tokenization. So I have experience in the past in real estate, in industry and production and yachts construction for the last 15 years, not big numbers of production, but boutique yards. So building one yacht by one yacht for a specific client with a specific need. Now, I am a little bit different in front of all the other digital company on this market because first of all, we have asset and we create assets. So we built yachts and I'm finding now a solution or a different vision for the share of a company that owns a yacht. The approach now in this market is that a yacht normally is used no more than 8 to 12 weeks a year. So the single owner of a single yacht have an expense of a, for example, 100 feet yacht that is a 30 meter, 5 cabins, have 5 person of crew and have an expense if do single season in Mediterranean Sea around $500,000, $600,000. And if do the double season is $1.2 million with transportation, Caribbean and Mediterranean Sea. So now this owner double season use only something like 8 weeks, 10 weeks, 12 weeks, but the season is 40 weeks. So what I'm developing with DigiShare is the possibility to create the digital asset, the digital token of the ownership of partial ownership of these yachts to be able to use the yachts in different weeks when the owner don't use the yachts. For example, the owner can tokenize 75% of the ownership of the yachts because he use only 25% of the time because maybe he don't have time to use all the time. And so in this case, he reduce, first of all, the expense during the year. And so instead of 1.2 million, he spend a fractional 25%, 20%, depends about the agreement on the smart contract. Second, if he sells 75% of the share of a yachts without losing the control, the crew and the use of the yachts, he take inside, so he take back 75% of the value of the yachts. So he spend only 25% on the value of the yachts, he spend only 25% of the global expense. In any case, he used the yachts more or less the same time as before. And he has different ownership with him. And this is the first model. The second model is that the other owners, so the 75% or 50% or the percentage that the owner of the yachts want to sell with the token, want to place on the blockchain with the token, that is remain a security, can be a model of investment. For example, a owner owns 25% and is a private use, and the 75% become an investment. Why? Because we manage yachts, we manage crew, and we manage charter. And all together, we create a plan that is the owner of the token, instead to use the yachts, can also have a little revenue coming out from the charter. Or can be a mix. For example, an owner that wants 10% of a yacht use 3 weeks a year plus have a 3, 4, 5% of revenue. So this is the difference. And this is the model that actually still don't exist on the blockchain, don't exist in the digital market. And I want to introduce in this new DigiShare platform. This is my proposal and my development in the last months. Also in the fund of investment that I manage, that is the issuer, because SGM Digital Asset is only the technological company. In the fund of investment that I manage, we have different opportunities. We are focused on the yachts industry because I am a yachts builder, small quantity, but since many years, and I know more or less the market. And we have solution for owners that want to sell the yachts or want to maybe don't sell the yachts, but they want to find solution. This is what we do in a very simple way.
Wow, Angelo, I'm rubbing my hands here because that really excites me. I mean, I'm a kind of I'm an OG in the tokenization space along with Phil as well. But this kind of tokenization really excites me. It does everyone else on the panel today. But I'm a glutton for, these luxury good asset tokenizations that show what's coming. Another kind of thing, Angelo, I wanted to touch on that, I spend, time out in the West Indies, Caribbean for the US folk out there, especially around Anguilla and Saint Martin, which isn't far from Saint Bart's, right? And just recently, I've noticed a plethora of yachts coming in, especially to Anguilla. I know loads of them are in Saint Bart's, so this is almost like a timeshare of yachts in terms of what you're
No,
describing.
that yachts, unfortunately, when they go over a certain dimension, they are
Yeah,
or private yachts or charter, very important charter. So when you go
yeah,
over 50 meter, when you go over 500 gross ton, that is more or less the size of private use, maybe sharing something like this. When you go over, they are
yeah,
private owner. The market, in my opinion, the market of
yeah,
the tokenization is between 1 million and 10 million, something like this. Why? Because the owner of a yacht of 50 million, 70 million, 100 million will never share the yachts.
yeah.
That
Okay,
but
got
the
it.
owner that owns a yacht of 5 or 10 million, maybe he want to have back the 5 million. For example, you have a yacht, you spend 10 million or you spend 3 million and you
Yeah,
want to have back half of the price because you don't want to sell, you want some liquidity. You sell only 50% of your share, but maybe you don't find one person. And so you tokenize and you find 5 person that use on 1 week each. So is a different way.
so yeah, so I say I fly into Anguilla, for instance, and I'll be like, right, let me purchase one of these tokens on SGM digital asset, and there I go.
Absolutely.
I've got a week with a yacht
But
floating.
I tell you what is the plus of this strategy because we come from the yachts industry and the yachts management and the crew management. I have 260 captains in my database. We manage yachts. So the biggest problem on a yacht when you are in double season, whatever, is the crew. If you have a good crew and you can manage good
Yeah,
the maintenance of the yachts, you have a good insurance, you can charter friendly, or you can manage 3, 4, 5, 7 different owners of a yachts without any problem. The problem comes when one owner manage himself the crew and after want to make charter or make himself the maintenance, checking the best place maybe, and after jump the season. So you have 10 weeks already charter with deposit and you have a problem on the yachts because you try to do something that is not maybe the best. So yachts charter and charter management, crew management and yacht management all together is the key for the
yeah.
tokenization of the share of the yachts and super yachts.
Wow, really interesting what you're doing over SGM. It's not just limited to the actual yachts; it's a
Yeah,
whole
I,
ecosystem there.
I,
So,
I want to add only one little small things. I want to introduce the tokenization of the yachts also in the fishing boat industry because some years ago I purchased Lures fishing boat that is an American brand, a historical American brand of fishing boat. And what we want to introduce some models with the crew cabin on board. And so we will have one captain on the yachts or whatever that manages the yachts, and it's possible to charter a fishing boat on the market without own the boat. This will be a new issue during this year 2026. Sorry.
wow. No, no, don't be sorry. We are degens of the tokenization world. We love to hear all this. So it's great. Thank you very much, Angelo, for your time. And obviously we're going to come back with there's loads of questions lined up, and sure the audience will have some as well. Thank you very much. Okay, so next over to Andy over at Token Shares. Love to hear what's coming from you, Andy.
Yeah, hi, good day, everyone. My name is Andy Lowenthal. I'm a co-founder of TokenShare. We launched here in the United States last year, and we recently opened an office in Dubai a couple of weeks ago. So we've grown from TokenShare to TokenShare Global in a relatively short period of time. And I think the main focus of our company is that we want to help people. We think that there are a lot of people, both here in the United States and worldwide, that are sitting on the sidelines from an investor standpoint. We think that there is, depending on which consulting company you want to listen to, there's a pretty large gap between the percentage of people that have the ability to invest. It's close to 75 to 80% of the population, and the percent of people that actually are currently invested in some assets such as real estate or luxury items is closer to 30%. So that's a pretty big gap. And what we want to do is bring an easy, understandable, and dare I say, fun way to start investing in assets that either they didn't have access to before, or maybe they have a special interest in. And we feel like when we empower people to, have access to investments that historically they haven't, start enjoying some of those double-digit returns on their investment that historically have only been available to a select few, that we're going to help the overall population of the United States and the whole world to have access to investing in and enjoying returns on investments that they otherwise wouldn't have. Our focus is really on real estate as we pierce the market. That's the background of our expertise. We've got a combined 70 years of expertise in the real estate market, commercial, residential, putting together investment portfolios, managing and underwriting. And we want to bring those strengths, we want to bring those talents, and basically just inject it with the new technology that blockchain offers. So in essence, putting together profitable deals is not in itself a new concept, but allowing people to take part in it and invest in it easily on their computer, on their phone, with a few clicks of a button, having the offering memorandum online, the tokens attached to a smart contract, and speeding up the transactions, taking out some of the lengthy parts, such as attorneys reviewing everything, everyone having to schedule time at a title company to close on the deal. We're really trying to clear some of those hurdles out of the way, as well as the lowest investment amount. So say, on a high-rise hotel in Miami, historically you'd have to have $5 million cash to even have a seat at that table and be part of that meeting. And what we envision is enabling people to invest and partake in investments like that with as little of an investment amount as, say, $10,000.
Awesome. Thanks, Andy. Really interesting to hear about you. I mean, TokenShares operating out in the US, it seems to be the golden goose at the moment, really, for tokenization out there. So,
yeah, we have really found an amazing response to what we're doing, both on the sponsor side and the investor side. And, we really just try to not overthink it. So if it's a good deal, it's a good deal. And we think that people invest in things that either they're interested in, they have a history with, or they feel comfortable with. And so, yes, we are concentrating on real estate, but however, we're going to roll out a token here in the next couple of weeks for a great company here in North Dallas. And what they do is they import one of the main ingredients for concrete. So this is a company that has contracts for years with TxDOT, and these are government contracts to build highways and infrastructure here in Texas. And so while it's not necessarily the office building that you see on everyone's website that people want to own a piece of, you can own a piece of these assets. So the contracts themselves are assets. The material that they're importing from overseas to mix in the concrete, that's an asset. The facilities that they're building, the bulk storage units, the transportation, all those things are assets that will be represented by ownership in the token. And it's the same thing for another project we're looking at right now, is putting together a private helicopter fleet that would be based here in the DFW area. We found many executives and busy CEOs that they might manage companies it's an oil and gas company. And so they need to be out in the field in West Texas. And, maybe they need to be in the oil patch that's not close to an airport. So an airplane doesn't make a lot of sense. So maybe a helicopter would be a better option for them. So we just kind of look for good deals with the connections and networks that we have in place, and then rely on our history of underwriting deals to take it and offer it to everyone.
wow, that's exciting. Again, like I said, with the yachts, kind of rubbing my hands when I hear the helicopter. It sounds really interesting. And I know you mentioned, and also for the other panelists as well, please, for the audience, please go and check out their websites and their tokenization platforms as well. But Andy, while I've got you in and you talked about the issuance, there's not financial advice by any means, but it sounds interesting. You've got a issuance going live very soon. And for people interested, they should just go to sign up at your platform. Is that the way to go about? Okay.
Yeah, absolutely. And here's where I have to tip my hat to DigiShares, right? So our website is tokenshare.io. Encourage everyone to go and look. You'll see some of the offerings that I just mentioned. They're in final underwriting stages, but we are using the white label subscription with DigiShares to make a seamless integration and have a dashboard available right there through our website that you can look at the opportunities, and then we'll be able to put the offering memorandum, the white paper, basically everything that an investor would need to know to make an intelligent decision on whether that's something that they wanted to participate in or not. So we're really appreciative to all of the technology and opportunity of partnering with DigiShares and Claus and the whole team there, and what they've been able to provide for us on our website over the past few months.
Great. Thanks, Andy. And then for the rest of the panelists, when we come to closing sessions, I'm sure they'll fill you in on their websites as well, where you can go and check them out. Andy, thanks very much. We're going to kick into some panel questions very soon, so we're going to be talking again. All right. Thank you very much, Andy. Phil, I'm going to bring you back in. Like how I like to suddenly zoom you back in. But I know we got our great friend over, Jason at RedStone as well. He's doing great stuff out there in their tokenization space. But I think it's valuable just to touch on in terms of Roza, Angelo, and Andy. I think it's a good example, right, of clients coming to DigiShares in the US. We're talking about the US today, tokenization in the US, but it just goes to show, but also our friend at RedStone, Jason, as well. You can come use DigiShares anytime you want, Jason. But it just goes to show, right? So many people now are looking at, white label SaaS platforms. They see a use case, want to kick off a business. We're talking about tokenization in the US, but I just feel like it's happening now. These are prime examples, right?
Well, I think real estate is obviously the low-hanging fruit, right? Everyone, traditionally high net worth individuals have some sort of real estate in their portfolio, so it's easy for them to understand. Regular consumers within the United States hopefully have the opportunity to buy their own house, so they're familiar at least with the process and the value of owning real estate. And when you go to all these other different conferences, you continually to hear real estate, real estate, real estate. One of the positives that's going on is that they're actually tokenizing traditional investment vehicles that already have liquidity, right? Because as I'm sure what'll come up on this panel at some time is liquidity. Well, when there's existing liquidity pools already out there, and now they're just tokenizing part of the process for efficiency and additional access and potential extended liquidity, that's when things really catch fire. So I think real estate by far is the most conversation I'm having now. I'd say probably after that, it's probably minerals, which is coming up a lot. And obviously with, the price of gold and silver has been up. It took a little dip, but it's still up as an asset. So, this is not surprising. Once an area that has some sort of regulation starts getting clarity, it's really going to take off. Traditionally, the U.S. markets have led the world markets. In this instance, it was kind of in reverse, like Saudi and UAE were really moving the market because they had more clarity and more acceptance of digital assets and digital securities. But now I would say U.S. is the 10,000-pound gorilla, is really creating momentum. There's a number of leading members within financial institutions that are on the record that have said this is now too big to reverse, right? They have too much time, energy, and resources that are invested in this sector for it to go back. So that is a really good sign. And I think now that you got the Larry Finks of the world, the Jamie Dimons of the world, going on every major media outlet out there screaming, tokenize the world, well, that starts to move the needle. And, with DigiShares is a really, really strong player with, like, I like to say, like the upper to mid market and down, because it gives a tremendous amount of flexibility for you to build your business, whether you want to use our advanced API offering where tokenization is just one part of what you're doing, and then you're plugging on other aspects. We've got a gentleman that's doing vertical integration within real estate development, all the way down to integrating to automating registration of plans for within the counties. So I mean, this can get you, just let your mind really run wild, and you can really do it. No one knows anything about DigiShares. We're not an egomaniac out there where we need to have our logo stamped on everything. You guys spend a tremendous amount of time, energy, and resources on building that brand, and that brand comes with it a long legacy of trust, reliability. Everything that you want that narrative to be about your brand is out in the marketplace. And I give this example a lot. We're like the offensive line in football. We're there in a CYA, cover your ass type environment to make sure that you do it in a clear, compliant manner, and we handle all the heavy lifting. And then you can be the quarterback and the highlight player out there, getting your brand out there, having relationships with your customers. And I think one of the most important things is to look at this as an internet marketer. When you're asking someone to take an action, you don't want to be sending them to multiple different sites. So the ability to have that white label solution where they are hitting your site and they're not having to leave and they can execute a full investment in whatever that asset class that you have is incredibly valuable.
Awesome. Thank you, Phil. I think that does show the use case generally for DigiShares, but the wider tokenization market in the US. Just popping this out for the whole panel before we get into any individual questions, but especially because the majority of you based in the US, and I'm sure Phil has some notes to share on this as well. But how has the narrative shifted, recently, maybe from experimental to institutional over the past year? Maybe because, obviously Trump's come in on the crypto side, things are taken off. But how could we relate this back to real world assets for say, but open to everyone?
Yeah, I'll jump in and talk about that. I think we're seeing weekly, monthly, more and more people becoming aware that this industry is here. And if you really think about the timing of how it's coming and the impact that it's going to have, we feel like it's this huge tsunami tidal wave that's just offshore and it's coming. And maybe people can't see the wave yet, but they're starting to look at the water kind of getting sucked out and more sand's being exposed. And they're kind of walking around like, I wonder what's going on. Surely the comments by Jamie Dimon and Larry Fink and, some of the comments they made just a couple of weeks ago in Davos got a lot of attention. And I think that's helping everything. Here in the United States, we really think that there's an education need. And so that's something that we're really focusing on our website and just our communication is we feel like the more that we can educate people on this industry and let them know how it works and intentionally separate what we're doing from, let's say, the word crypto, because, everyone's got all kinds of horror stories about rug pulls and investing in things that they heard about at the bar and they lose all their money. And really the only thing that RWA assets have in common with crypto is that they're formed, minted, bought, sold, and traded on the blockchain. The beauty of what this industry is when people ask, well, why is this token worth what it's worth? There's something behind it. There's something real. There's something they can see, feel, touch. We can appraise it. It provides cash flow. In some cases, it appreciates. And so we feel like the more we can educate people here on our side of the pond in the United States, that this is an industry that they can enjoy the security, the transparency, and the convenience that comes with blockchain technology, but without the inherent risk of investing in something that may not have anything behind it. And I think the more that we can educate people, the more that they'll be accepting to actually adding tokenized RWA assets as part of their portfolio.
Awesome. Thank you, Andy. Jason, I know you're a leader in tokenization space. You've been around for a while. Just to bring you in on this, what's your perspective? And I know obviously STM before for the other security token market before it got taken over as well. You would have great experience there as well. What US sectors do you currently think are probably leading in tokenization, maybe outside of real estate? And also one of me and Phil's favorite topic, leading into secondary market as well. When do we think we'll see some sort of liquidity coming to secondary markets?
Good question. I mean, I'll kind of start it off with kind of piggybacking on the institutional portion of it and kind of flow into this one. But right now, I think over the past year, a lot of the traction has come from the Genius Act passing, which opened up the floodgates for stable coins. It continued the momentum also for yield coins or tokenized money market funds and treasury products, and their usage. So I think a lot of the institutional focus right now is on collateral mobility, using it for post margin, stuff like that. And the other portion is operational savings and where we can save money here. So when the DTCC started having, their no action letter, that was another catalyst for this space, tokenization specifically. Although it's not necessarily native tokenization, it's a step in the right direction. And when you start looking at things like corporate actions, which cost about $34 million each to execute, you start thinking about where can blockchain really significantly impact and save money, effort, time, and redundancy when it comes to operations. So I think that's where a lot of the institutional focus is right now, on top of course, waiting for clarity to come out to have just very specific, more specific, market structure there. Segueing into, secondary markets and kind of what we've seen in the past, call it 5 years, 7 years. It's shifted, right? I think that right now, like I said, the more vanilla assets are the ones that are moving a little bit more, the stables and the treasuries. Outside of that, though, private credit has gotten a lot more attention lately, whether it's through vaults and creating strategies there, or simply private credit funds that are then used to loop, like as a credit Apollo. So all to say is that I think things are shifting up the risk curve here. I think something important to note, though, is that secondary markets are something that, obviously when we talk about liquidity, secondary markets is the first thing we think about. But let's also think about how some assets, the underlying asset is just fundamentally not that liquid. It doesn't change in price all that often. But what you can do is have it be more composable and usable in the DeFi space. You can take out collateralized loan against a piece of real estate. You can take out, participate in other, liquid restaking tokens we can get into, of course. But you can get creative with it. So I just threw a whole lot, but I'll pause there.
Yeah, but Jason, that's getting dangerous. Phil knows as well. If we start talking collateralization for RWAs, we'll be here all day. And I think Christine, Claus, and Phil, we should do a webinar on that sometime as well, because I think there's a lot to talk about. But Jason, yeah, for the others don't know, is a big OG in a space. A real plethora of information on tokenization, so definitely hit him up, and RedStone offline as well. But just before we do move on to the next question, I can't help it, right? But got to ask you, Jason, while we got you online, do you see collateralization of real world assets happening? And it might not have to be real estate, but it could be, I don't know, some asset that's come on board. It could be a brand and it's suddenly taken off, right? There's some real value then, right? From something that's gone from quite small to quite some big. Then I think you could use that RW asset, collateralize it and get USDT. I think, correct me if I'm wrong as well, you're close to this. Some of the RWA assets, they're not liquid. It's harder to get liquidity, such as BTC, in the market today. Is that a problem we still see, or do you see that changing?
I mean, right now, because of where kind of risk parameters are at, that's why we're still looking at those more highly liquid assets like the treasuries products being used as collateral, at least for now. Same with, posting margin and so forth. Eventually, when we get to collateralized loans and whatnot, I think the other thing too is there visibility into the underlying asset, or to whatever is being collateralized, right? And that's going to come with, integrating a little bit more on the legacy infrastructure side, having data provenance of, underlying assets like real estate and so forth, so that the participating parties, those that are accepting the collateral, can feel comfortable lending against it and so forth, having that visibility. And that incorporates a whole slew of things in the blockchain space, not just the tokenizing the asset. That's rather the easy part. It's the other information and ecosystem you're building around it.
Awesome. Thank you, Jason. Question out there for Roza. Coming to you. Thank you. From a finance perspective, how do we define institutional grade from a US tokenized asset, for example?
It comes from the quality of the asset. When you think about institutional grade, you have to think, the token is just a method. The token is just, digitize it, make it into fractional shares and make it like more enabling access to it. But what really matters is the asset quality, the asset structure. And for institutions, what they do care is who does manage the asset. Do they know what they're doing? What are the risks? What if anything happens? What if the blockchain disappears tomorrow? Would the asset still make sense? And I believe that in TokenLand, for example, we concentrate, on the newly developed apartment buildings because we do believe that for the average, families that they are in high demand for rent, and that will, create the income, the passive income for the token. So yeah, it's more about the asset quality, the asset structure, and I believe that that's what will do in tokenization for any platform that they're tokenizing is the quality of the asset is really what's going to make the platform successful.
Thank you, Roza. So for those quality issuances and tokenized assets, definitely come visit your TokenLand, which is currently open now. Is that right?
Yeah, we already launched. Yeah, you guys can come visit at tokenland.org, our website. Yeah.
Awesome. Thank
We're
you.
very, very excited.
So are we. So are we. Can't wait. And then over to Angelo again, with this US theme. Why did you decide to bring high value assets such as yachts into the US market rather than keeping them in more, let's say, digital asset friendly jurisdictions?
Yeah. So, in my opinion, yachts and jet, but specific yachts are assets in a wide range of price, as I say, between 1 million and 20, 30 million, no more for this. And people that invest in token, in this case, that owns a part of a yacht for different reason and for different use, must be comfortable. So if you are regulated in US or in Europe or in Dubai, where there are the three regulations, the investment as a single investor are more secure. Second, I have the brand in America and my company are in America and these digital companies in America where now starting 1 week, the regulation is more clear because 28th of January come out some specification and some explanation of the regulation of the tokenization. And we issue security, means we don't issue token or coin or whatever that have no value. We issue security that are registered, that are only for accredited investor, and so is another level. An accredited investor that want to invest 1 or 2 million in a token that is basically a digital share of a company, invest in a place that have regulation. Don't invest in a place that is così and no clear regulation or no clear, okay, if disappear the token or disappear the share, where I go or with who I speak, or there is a lawyer there, or I have to take a plane that land on a small island without an airport. So basically stay in US 350 million people and 12, 13 million people accredited investor that can invest in this product are the place to be, is the place to be. Other jurisdiction, Europe for sure, and Dubai for sure is very, very on this, but America is the place to be. Also because America is yachts focus and boat focus. So Florida, for example, thousands and thousands of yachts sitting here and sleeping here, ready to be tokenized and used in the charter way. This is my view. Obviously, you can tokenize a yachts that have different flags, so flag in Malta, flag in Cayman Island, whatever. The tokenization don't touch the flag, touch the ownership. That's it. So if this fit your question.
Yes, thank you, Angelo. Much appreciated. Just a note out to the audience. I could see like a plethora of questions already there, so we'll try and get to them at some point during the webinar today. We'll try and answer as many as we can as we go through the themes. But Roza, just coming back to you, I did note one there. I can't ask the whole question because we're time constrained. But my question was, to you yourself, why fractionalize those assets? So I guess real estate assets to make them harder to sell to a single buy in the future. I'm going to kind of front run this, but feel free to jump in and anyone else there. But part of tokenization where we are at real estate, if there is something that's fractionalized by 200 times or 300 times fractions, at some point there's governance right for those token holders to come together and say, hey, we want to sell the whole asset. And what would happen then is it will go from on-chain back to off-chain. A single buyer will come in and buy that. I'm talking out there, just one example, but Rosa, throwing it back to you and the rest of the panel. That's one question that was coming out from the audience.
You're muted, Rosa.
Sorry. It is a very good question, and this is something where, like, as we discussed, liquidity comes in play too. There is, you do provide offering documents, and operating agreement, to investors before they decide to invest in your token. And one of the things discussed, in one of those documents is, the lockup periods. Unfortunately, with the regulations we deal right now, like TokenLand, with the regulation D and S, hopefully we'll move to regulation A with the next offering. But currently we do face that lockup period of, 12 months. And because we are in the United States with the regulation D for accredited investors, that kind of makes us to look into international investors, same as for accredited investors. So we do put them in a lockup period of 12 months, both of the parties. So before anybody does an investment into something, a little bit illiquid like that, they have to understand these lockup periods. After lockup periods, there are, plans for secondary markets. There are markets like Securitize, Inc., T0. If you do prove that, your concept is working, you build the trust, I believe that there is a chance for you to go to secondary market that will enable some type of liquidity and trading, between, qualified still under SEC investors. So there is a way exit, but if the majority of investors do decide that, hey, this asset is not really working for me, and I don't really want to participate, then there is a way out. And one thing that is really great about real estate is that it does gain appreciation when you do buy something that has been fractionalized, by investors like this. You don't have any finance cost, interest, costs. So you do fully pay off your property. And as we've seen in the past 50 years, the property value does increase, no matter, it's like a hedge against inflation. So yes, it is, we are not there with regulations where it can be liquid like Bitcoin, or any other, crypto asset, but we are moving in that direction. What we're doing right now, I believe, is we're building the trust for this structure. And if we can prove this, the regulations do ease. We do have Trump, as you guys mentioned, he's very pro crypto, he does want to make this type of things work. And I believe that, if we just stick to what we offer, I liked how Andy was talking about, education. We face that a lot in TokenLand. You have to educate your investors, because a lot of people don't really want to read your 150-page PPM, or operating agreement. And then they have a feeling like, oh, well, I invested, but now I want to be out. I don't have money or whatever. I have to pay rent, so it is the education, and this is like really where TokenLand stands on right now, is educating, the investors and public into what, what are you potentially about to invest into. But it is a great concept. There is way out, and even if the majority does decide, there is a possibility to still gain on what you spent.
Awesome.
I'm gonna hop in real quick, because at the end of the day, real estate doesn't change. There's only a few ways that real estate can increase value. Either you're going to buy something and you're going to reposition it, right? So that takes time. You're going to go in there, put lipstick on the pig, or increase what it is. That's one. Or you're going to increase occupancy, or you're just going to get general appreciation over time, right? So that's why we created Rex, which is a joint partnership between Texture Capital and DigiShares. Texture is our ATS and our broker dealer on that. But again, that's why it takes a little time. And so managing that expectation of the investor, that this isn't something that is like a meme coin where someone's trying to look, I want 5,000% return on this investment, right? So at the end of the day, the investor has to also take accountability and remember, like this is still traditional investing in real estate. All we're doing is allowing fractional ownership, which again delivers more eyeballs access, which gives you the opportunity for liquidity in the future. So the fundamentals don't change.
Phil,
I was just about to say, yeah, if you guys just let me add a little bit, the fundamentals don't change, and we're really not trying to reinvent real estate here. We're just trying to provide more access to it,
Right.
to people who can afford to just go and buy the whole real estate. But if you think of real estate on how it actually works in a traditional market, it doesn't work that you buy one day a house and then the next day you go and sell it. It just doesn't work like that. And tokenization is really not going to fix. If that's the standpoint of the investor, then there are, hype meme coins where you can invest. Tomorrow you might go 10x, or tomorrow you might go minus 10x.
Yeah, and you Rosa hit it, is the major value is not having to come up with that massive down payment, and you can participate in potentially a landmark property that you would never in the world have access to, right? And you can leverage that type of appreciation for a landmark asset, but you don't have to come up with the $100 million down payment or the $10 million down payment. You can own a fraction of it. That's exciting.
Yeah,
Yeah.
exactly. It used to be the citadels of this world, right? Hedge funds come in and buy a skyscraper, and you hit the nail on the coffin, right? Where you can come in now and buy 0.001 of the Burj Khalifa in Dubai. I'm out here in El Salvador, so I don't know, something out in El Salvador as well. But we get the picture, whether it's in Palm Beach, Florida, or in California, Sydney, Australia, in the Caribbean, in Europe. You can buy, you can diversify your real estate portfolio now, right? And
That's
actually,
right.
going off piece here, but it's always good fun with you guys as well. Um, I don't know what you think, but nowadays people have a second home and they want to invest, but you got the mortgage there, and obviously it's going to be the same in the US. You've got all those costs, the running costs. But now actually you could go onto your app platform, or you guys that are doing real estate tokenization, you could buy a fraction in somewhere in New York, a fraction somewhere in Florida, Hawaii, and you can diversify your portfolio from high risk to low risk, have your cash cow and have your speculation, but actually, you don't have to go off and get the big, massive mortgage anymore. You can put your, additional disposable income. So yeah, I think we're really moving in that right direction. I don't want to close off this topic, but I've seen another audience question, so I don't want to scamper too much away from it. And actually, it's from a good friend, Edward Jacobson. Used to work with him at Gibraltar Stock Exchange back in, wow, some time ago. 21, 22, we were building out digital securities, but hey, was way too early then. We're way ahead of the game. But he wanted to discuss liquidity strategies, how much transaction value do you expect from the various assets classes in RWAs, what would be most liquid, private debt, real estate? There's a big question there. But I know one of his biggest themes were actually back in 22, he wanted to look at doing DeFi Uniswap pools on RWA tokens. So I think actually one of his ideas from back then, I've been, you know, pushing the barrier out there. I think we will see liquidity, and I know Jason, you touched on this earlier, and some of our other panelists will see that. I think we will see liquidity coming in from DeFi rails, maybe not specific retail, but we'll see institutions coming in, utilizing DeFi, creating liquidity pools, similar to what we see in Uniswap, Aave, or Balancer, for instance. And I know DigiShares, you know, working on something in the background on that, but I see that as another route in for liquidity. I don't know what you guys feel about that.
Well, I think the major institutions will push the liquidity arms. I mean, it's going to be whatever. Um, they're like the tidal wave. Once that comes, everything else will follow. Again, to the point of the panel, that there are some asset classes that just traditionally are not crazy liquid. There's not a whole lot of movement in some of those, but The more traditional finance, again, the environment creates efficiency, and just like you went from a horse and buggy to a car. We're not trying to recreate what it is. It's just the execution of it becomes quicker, faster, cheaper.
Exactly. I'm sure market makers at some point, even if we're not talking about high frequency, we'll get the likes of market makers coming in. All right. Moving swiftly on to Andy, back to token share. We really want to talk about your helicopters, so get ready for your question. Andy, your marketplace features diverse assets like Texas infrastructure, as we mentioned, and helicopter fleets. Why did you choose these specific foundational US asset classes to launch token share?
Sure. So we feel like here in the United States, investors are looking for obviously things that are going to make them money. So that's where you start is a sound, safe investment that is going to provide a rate of return. Beyond that, I do think there's levels of excitement in what it exactly is that we're tokenizing and what they're going to own a piece of. And so if you think about, sitting around with your friends watching the Super Bowl, hey, what have you been investing in lately? Yeah, I mean, it's fun to talk about a tokenized asset, maybe a commercial office building or a multifamily or something like that. But I think there's part of the intrigue in saying, hey, I invested in a fleet of private helicopters. We are also underwriting and looking at underwriting what's called here in America a rick house. So we're in Texas, which is not too far from Kentucky. So bourbon is a pretty big deal here in the United States. And so we've got a contact with a local distilling company that just makes wonderful bourbon. And they're looking to actually build brick houses there at their property. And so if the investment has a story behind it, if it has something interesting and allure to it, we feel like that's just going to at least intrigue more people to come and check it out, and then hopefully get enough people that want to invest in something like that. So if you're a bourbon drinker and you have an opportunity to own a percentage of an actual rickhouse where the bourbon is aged, that's a fun thing to invest in. And one of the things we haven't really even had a chance to talk about so far in this webinar is utility, right? So adding utility to your token offerings, the feedback that we've found, the more utility you can offer, it garners even more interest and ultimately more investors. So going back to the bourbon rickhouse, you buy so many tokens. I mean, obviously you're enjoying the rate of return and hopefully the appreciation on the investment. But maybe if you own a certain amount of tokens, you have access to a special bottling or a private tour, or you can have one tasting a month, or, I mean, the possibilities are really endless. But I do feel like adding utility to the token, going back to the helicopter fleet, I mean, we're really targeting CEOs, executives, really busy people that need access to travel within the North Texas area quickly. That right there, kind of like the example with the yachts that was given earlier. Maybe, yes, you're investing because it's a smart investment that's going to make you money, but maybe there's utility. So if you own so many tokens, you get access to one of the helicopters so many hours out of the month. So we just really feel that the interest comes with the utility that's provided by the tokens, and then just some of the various ways that we can offer investments.
Yeah,
Andy,
I think
real quick, Mark, I love that you brought that up, because some folks do invest in things because there's an ROI, like that's their primary goal. But then there's other folks, either they have an emotional tie to something that they want to support, and it's going to be a hell of a conversation over a beer, right? I love that. And to your point, we've got some folks that have international yachts and houses, and they are tokenizing those spirits almost like a timeshare. And so that utility aspect of it is huge. But I love the space that you're in. I think it really has legs. But utility is something I think maybe we don't talk about as much, and we probably should a little bit more as these things roll out.
there you go, folks. You heard it. Grown-up utility tokens are now digital security. So it's really real businesses coming forth, launching tokens with a real business revenue, regulated, approved, and as the guys mentioned, with utilities. Love to see Airbnb out there as well, doing some sort of
That would be neat.
point system as well. Maybe someone can think about that and launch a company to challenge them. Right. Okay. So the next topic we've got coming up is overcoming operational and technical barriers. So just generally, I guess, out in the US, what's the biggest hidden operational costs when moving a traditional asset on chain?
Well, I mean, I'll take it from the DigiShare standpoint. Obviously, we're biased. You need a platform to be able to do that in a compliant manner, right? I mean, that's like the foundational aspect of it, but it's really three phases, right? You're going to have your legal because you need to, dot your I's, cross your T's. Then you need to have a platform that will enable and enact the issuance and management of those tokens. And you also need to have a marketing arm to be able to get that megaphone out and tell the world about your project. So I'd say from a tech piece, it's going to be a platform, and that's hence why we built DigiShares. And I think it's probably a good lead into maybe the question for me is like, how do we handle some of the technical onboarding of users and clients, right? So I would say around like the digital wallets. So if you can follow directions and you've ever installed software on your computer before, like I don't want to overcomplicate it. You can do this, okay? And the default traditionally is like MetaMask, but we work with Wallet Connect that has, I don't know, 80 plus different wallets out there. But something we've also done in the background to increase the user experience for folks that maybe aren't well versed with a digital wallet is, well, we're actually create the wallet in the background, and they actually don't even know that it exists. All they know is that they log into their account and they can see their balances, right? They can see what's in there. They can move it in and out, but they're not actually having to interact directly with the wallet. So it's like a phantom wallet in the background that again just increases the user experience and lowers that maybe anxiety of having to create and manage a wallet. So I think that's probably a good segue into the technical side of it, because again, we just want to make this easy. We don't want to scare people away.
Thanks, Phil. Actually, just before I kind of move on, there was a question out there, might be great pose to you and Jason actually on the tech side. Is there interoperability between blockchains, custodians, and marketplaces?
Well, it's coming. It's yes and coming. So it's a yes and. So I think as we push towards the 7943 model that we're one of the authors of, that's how the industry runs. I always put a comparison. It's when Apple had their single charger for their phone, and the market really asked, hey, can you give us a universal charger for this bad boy, because it just doesn't make sense to have this walled garden around this. So I think being able to play nice in the sand, it's like high tides raise all. So that's the philosophy, because if you try to section this off, all you're doing is creating friction and fragmentation, and it's like the whole reason why we created this is to remove that. So don't create another layer and be that person or that entity to do that to the marketplace, because it's completely against why we're doing it.
Great. It's already on Ethereum, Polygon, and actually recently announced a partnership with Injective. We'll be bringing 7943 there as well.
That's right.
Jason, before I move on, any thoughts on that as well?
I just generally believe it's a multi-chain world, and kind of just depends on use case to use case and asset class by asset class. Where are the resources? If you're picking, call it a host chain, which one is going to be the most useful for your specific use case and has the resources to kind of help you out here along the way. But from there, it expands. People and investors have different ecosystems that they want to be a part of, and you want to make sure your RWA is also available there. So there's interoperability between chains, and then there's interoperability, as Phil kind of mentioned, with the legacy systems in terms of integrating now, okay, well, reporting, custody, and stuff like that. So it's also kind of on its way. It's part of plugging in the plumbing, right?
Agreed. And I think, working with our peers over the years, there will be interoperability between marketplaces, because we need to work together to bring in the liquidity, and we're all working in the same marketplace. So I see that will happen regardless. And Phil, back to RedStone. There's a question for you here about how would RedStone ensure that the property value or price feed is 100% reliable for, say, US smart contracts?
Yeah, we're proud to say we're the only major Oracle with zero mispricings. We've been live since 2023, so that's been very fun to keep up there. But really, the simple answer here is redundancy, right? We have a lot of safeguards in place to make sure that if we know one data source, or well, first of all, we plug into multiple data sources and directly to them, and try to stay away as much as possible from third parties, right? To get it just granular. But from there, we also have a way to clean that data and also. Again, if one source is missing, we can go ahead with our backup and another one after that. So like I said, there's usually you never get to the stage 3, stage 4 backups because of how built out it is in the beginning stages there. But to answer your question, we also customize use case to use case depending on how often do you need a price to be updated. For certain markets, you may need a lot more frequently, like in perpetuals, than you may need in real estate, which is probably easier to update maybe once a day, and you should be okay. Right, but visibility into this direct source, it's redundancy to make sure that we always have a price, a good price. And then another thing too is to also think about the market dynamics of certain assets, right? And so we don't necessarily price by volume weighted average or pricing right there. We do it liquidity based to figure out what markets are actually moving and try to remove market manipulation from the calculation of that price.
Definitely. Thank you, Jason. We're going to whiz back to Monaco, the Caribbean, and the yachting world with Angelo again. How do you handle the physical side of operations, such as maintenance and insurance, with a digital token structure? Does it actually matter, actually?
Yeah, basically it's the same because the token in this case is the ownership of the yachts and the fractional ownership or whatever you want to consider. And the owner of the token don't enter in discussion about maintenance or about where you go to take the insurance because there is a budget at the beginning of the year and the beginning of the process. There is a budget that is a common budget with the list of the expense. So we know already before how much cost to run a yacht because every yacht more or less have the same expense. The crew, the maintenance, the insurance, the fuel, and there are fixed costs and variable costs. And the problem, you have to have always a crew ready to replace another crew in case of something, I don't know, COVID or whatever it is. And so the bigger issue is to manage a crew properly and to manage the maintenance properly. So when you do the double season, for example, you do Mediterranean Sea and you do Caribbean Sea, when you move the yachts, 23 days of transportation. When the yachts come in Caribbean, need 1 week of maintenance before the season because don't have to stop during the season. And same when come back in Mediterranean Sea. But there is no connection and no management between the owner of the token and the management of the yachts. The owner of the token enjoy or the profit or the ownership or the use of the yachts, so the luxury lifestyle use. And this here we enter in the utility token, as we spoke before. So the utility token is the token that allowed you to use the item, the yacht in this case, or the plane or the helicopter, whatever. And so in my development, I have a security token that is the ownership of the yachts or the fleet or whatever is a members yacht club or a members private jet club. And the utility token that allowed you to use the yachts if you want. Otherwise, end of the year, you transform and you change, or we change in our platform from the utility token to USDT or stable coin because we transform that was a previous allowance to go and use an item to a profit. So this is our technology, our project. So to allow the people, 1st of January, you invest in our token or in our yachts fleet. Good. You invest 1 million, you have 200,000 utility token. If you use during the year, very good. You enjoy your lifestyle, you enjoy the yachts. We have 10 yachts, 3 in Bahamas, 3 in Florida, and 3 around. Perfecto. You can choose wherever you want to go because you own the token of the fleet. With your utility token, you use the yachts you want for the time you want. And after end of the year, maybe you use 130,000 token, remaining 70,000 token in your wallet, and we transform in stable coin or whatever you want to do. You can reinvest the difference in another token. And the next year, 1st of January, you will receive again 200,000 token or similar like this. Depends about what you choose as a program. So this, I don't see any problem between the token ownership and management and the yachts management. That are two different worlds, and our fund of investment manage the operation.
Thank you. Greatly explained. And again, the word utility keeps popping up. So watch this space. RWAs are definitely going to be burgeoning with utilities, and we can see the real business use coming forward from that. Thanks, Angelo. Appreciate you explaining that. So from yachts to helicopters, Andy, over to you for how TokenShares emphasizes the transparency and clarity regarding fees and risks. And then from a project owner view, how would you build a dashboard that simplifies blockchain for non-tech investors? You know, really the normal person outside of RWAs and crypto while maintaining an institutional grade security.
Yeah, no, that's a great question. One of the things that we love about this industry is blockchain, and the technology inherently lends itself to transparency and security. So it really does not even give bad actors a chance to play in this arena. And so we really rely on that. We're a fully transparent company. When we offer an investment opportunity, there'll be a full underwriting, a full white paper, offering memorandum. We feel like it's so important for our clients to have an absolutely full understanding of what it is that they're investing in. And going back to earlier, one of the conversations, we're not trying to reinvent the art of a real estate deal or an asset deal. I mean, there's going to be an exit strategy. There's going to be different ideas for, okay, if we get an incredible offer to sell, then there's going to be a reward then when it's liquidated to the token holders. And even if we find someone who wants to buy an asset, it doesn't even necessarily have to come off chain. They can buy the tokens from the token holders. So at the end of the day, we really think that security and transparency is paramount, which is why we specifically choose this industry to start offering investments. So we really just want to piggyback off that idea with all of our offerings, all our communications. If someone comes to tokenshare.io and doesn't have a really great understanding of what the opportunity is, that's on us. That's on us to explain it better and have further conversations with them, and for them to send us emails, for us to call them to make sure that they know everything about what it is they're getting into. We're just adding this layer of technology to deals that have always been in existence. And I know the helicopter deal, it's fun to talk about, but right there, that we didn't wake up one day and say, oh, what would be cool is to go start a company that offers private helicopters. We have a great contact in our network. Wonderful guy. He flew Black Hawk helicopters for the Army Rangers for almost 25 years. And he has, in my opinion, what is an absolute dream job right now. But for the past few years, he's been privately flying for the royal family there in the UAE. And so if and when he comes back stateside, that is someone that we would reach out to who might have an interest in running the company, managing the company. I'm not a pilot as much as I wish I were. I don't know very much about helicopters. I'm a businessman. I can put together the profit margins and the usage and the appreciation, depreciation, and all of those things like that. But we had an experienced helicopter pilot in our network who knows lots and lots of pilots here in the Texas area. And we do have a network of executives and CEOs that have mentioned that this is a desire they have, a need that they have to be able to utilize, private helicopters in addition to or instead of private jets, which most people are familiar with now. So But again, overall, we feel like blockchain technology itself, and then the added layers and the partnerships that DigiShares have in place, to cover the KYC, know your customer, the anti-money laundering, AML. They have wonderful partnerships already in place that make those screening processes seamless. So that conversely, we want our investors to be very clear about what they're investing in, but we also want our sponsors to know that the investors they're bringing on board are the right people that they want to work with as well.
I tell you what, Andy, there was I'm in LA, and back early in my career, I was doing business with CEO of a very large mortgage company, and he lived down in San Diego, but their office was in Sherman Oaks, basically up here in Los Angeles. Every single day, he would get in a helicopter, and he would go from San Diego to Sherman Oaks, and he would, excuse my language, he would bitch and moan over just the total cost of ownership of owning that helicopter, right? So I absolutely see, how he would have done something like this, a fractional ownership of a helicopter to be able to distribute that ownership of it. So I love it.
And I've been getting hit on the wrist from Kristen at DigiShares for my timekeeping.
Yeah,
We've
you
got
got to
two more
roll.
topics to get through, and no, I love talking and feel like we need to probably do another webinar on similar topics on this liquidity. And there are so many Q&As out there in the audience. Unfortunately, not going to able to get through all of them, but I see a couple of questions coming up that we can touch on. That we'll cover that. But move into the next topic, which is could go on for several hours. It's the tokenization of sports and luxury assets. And I know Phil will kick off with this one, but I'm just going to go to Roza, because missed you out on some other stuff, and also there's some audience questions, and this kind of covers some of that. But how would we categorize a fan token with voting rights? Is it a utility or security in the eyes of the SEC? For the audience, I've kind of jumped straight into this. We'll come back to Phil has a great kind of experience on the sports side. I'm very passionate about this side, but Roza, just on the regulatory side, how would you categorize a fan token with voting rights? Is it utility or security in the eyes of the SEC?
So being in the United States and dealing with a lot of, SEC regulations, in most cases, utility, the voting and fan tokens would be security. The thing to understand here is that the distinguishing, mechanism of utility token and security token. If utility token anyhow touches the value of the token, or enables investor to participate in some type of profit sharing, then it is always a security. It doesn't matter how you label it, utility or security token. So yeah, in most cases it is utility, but it does depend on how it's used. If it only provides, like in gaming, for example, you can get some, utility tokens are used, and you can get some tokens that, enable you to go to a different level in a game or something like that. Then it could be a utility token. Then of course the utility token doesn't have that much of a SEC oversight, and it's easier to deal with. So yeah.
Thank you, Rosa. I mean, it's really interesting, and it answers some of the audience questions in terms of regulatory hurdles in the US, and in this instance, sports. Phil, I mean, coming back to you, because I know you're an expert in this field. I'm passionate about this field, but just leading on from Rosa's answer there, are we seeing interest from US sports franchises looking to raise capital for stadium infrastructure, for sports players looking to raise capital for their training?
Sure. So obviously, yeah, as a former professional athlete, this hits home for me. What I will tell you is, and I'll kind of walk through very quickly because I want to be cognizant of time, is the use case. And so there's a lot of buzz out there of, and I'll talk about maybe football franchises, and like every city wants to be able to host a Super Bowl. If they are a cold weather or an extremely hot weather city, basically the de facto is you need to have a closed air arena, because especially when it comes to Super Bowl, the folks going to that are not necessarily the traditional sports fan. It's a lot of the corporate folks that are going to that. And, we just experienced the Super Bowl. And everything you heard about was how expensive the tickets were, right? $19,000 tickets and so on and so forth, $100,000 suites and $1 million suites, blah, blah, blah. Well, they want to have an experience where they're comfortable. And so, in order for, and I'll give you an example of what they're doing in Cleveland, they're going to do a $2.4 billion development because Cleveland is a very cold weather environment. They need to have a closed place if they ever want to host the Super Bowl. So think of the mentality like this. Instead of going to the city and saying, hey, we're going to slam this stadium down your throat, city, and we want to propose some additional taxes. What if the conversation was, hey, how about citizens come and invest alongside us in a fractional ownership capacity, right? And that because you're going to be the people that go there, that patron it, like you're going to be the one that go to the restaurants, stay in the hotels, go to the events. So we like to call it like you're an investor and a consumer. So you're an insumer. My good friend Douglas Borthwick coined that phrase. I think it's brilliant when it comes to sports and entertainment because you are being part of that narrative, and it goes with what Andy was saying. It's also a great thing to talk about. Hey, I own a portion, almost like a brick in the ground of that development. And so what are you going to do? You're going to go support your investment. And so you turn into like micro chief marketing officers and you want to tell the world that you invest in this. But in addition, so then if there's any shortfall of what they couldn't build from an investor standpoint, then you're going to the city and then asking, hey, any additional shortfalls, maybe we submit some additional taxes to be able to cover it. And so it's not the whole thing. So it's more of a pull narrative rather than I'm going to jam this down your throat in a push narrative, and to be received a lot better. So I do come from that world. I know a lot of the ownership. It has been received quite well. Obviously, some of them are so far down the line on some of these new ones that they don't want to change the narrative. But moving forward, so I've spoke with some of the largest architectural firms. As you know, architectural firms, they're going to be part of that early conversation because they need to scope out the full investment that it's going to take to do these things. So that's almost like a lead gen. Hey, have you thought about, go talk to these DigiShares guys that maybe you're able to offset some of this cost and be received a little bit better. Outside of that real estate infrastructure side, then I had a discussion with, I won't name his name, but a former NBA basketball coach, head coach. And we were talking about investing in players. Back in the day, there was a fan, I can't remember the actual name, but it was like Fan Text or something like that. And they invested in a fractional ownership of a professional athlete. And, but it's too late to invest when they're already a professional athlete. You need to catch them when they're young and there's a potential upside so that the risk reward is there. So you need to catch them basically when they're in high school, because now high schoolers are getting NIL deals, college guys are getting NIL deals. Here's a way that you can bring a little bit of money to a family, because statistically, 86% of scholarship athletes come from impoverished homes. So being able to inject some capital into their life early age because they're a potential 5-star athlete could really change the way that they live their life and the decisions that they make. And I'll give you an example of when I say decisions that they make, meaning you're not going to sign with an agent that's just going to hammer you and they give you they're taking a terrible percentage just because you need it, right? There would be some guidance in this. Say, hey, look, only sell off maybe 5 or 10% of your upside so that you don't get in a bad deal. So by the time you're a professional athlete, you're giving away 70% of your income and you're barely making it. And so you've really just delayed. You got a little bit on the front side, but then you're going to struggle on the back end. So it was received really well. He thought it was a fantastic idea, but then it turns into, all right, you need to be able to catch these folks early. And that's the only way it's going to work. Otherwise, when it's too late, the professional athlete doesn't need the money. You're not going to get the type of terms you want. You're not going to get the upside that you want. So there is a lot of use case within sports entertainment. The same thing, just switch out athlete and put in singer, dancer, whatever that talented person is. It could really change their life and help them to make better strategic business decisions and potentially life decisions because they can have a little bit more money in their pocket.
Awesome. Thank you, Phil. Great explanation there. And Jason, moving to you from an Oracle point of view in terms of feeding price data. Obviously, we're used to it on normal assets, but for dynamic token like sports data or player stats that Phil mentioned, how would Oracle keep the token's value accurate in real time?
Good
Difficult asset.
question. Yeah, no, I mean this is where it changes up a bit. I can't speak too much to any given use case just because it varies, but the common denominator is we plug into a trusted source that would determine that outcome, either through an API or another connection, right? And if there's a second or third source, even better to cross check. But really, it's like I said, it's case by case. I do know that RedStone and Kalshi recently announced a partnership working together there. So more to come on that. But unfortunately, I'm still a little green on that side of things of that engagement.
Well, I can
Yeah.
see that just working where as long as you have the data feed where maybe in what we talked about for the athletes, they're basically their values being appraised. I'm sure that would just be updated within a data feed, and then they would act upon whatever that data source is that,
Yeah, exactly. And then we just keep checking that as often as needed, depending on, again, the complexity of whatever we're measuring here.
Awesome, guys. Thank you. Angelo, on the luxury theme, obviously with the yachts, do we see a crossover where maybe a sports star starts tokenizing their luxury assets for their fans, for instance?
Yeah, is a good question. In my opinion, can be very, very interesting if the investor or the owner of the token can use the asset. Means if you tokenize an asset and is only a sleeping investment, is like to own an apartment put in rent for 5 years and you cannot touch your investment. If somebody think to tokenize some asset but allowed the token holder to participate or to come to a party or to use the villa for 1 week or the yachts in this case for 1 week, for sure will be interesting because you have to add something to a token that gives something more than a normal share of a company. Because when you buy share on the stock exchange or you buy share of a company privately, you cannot use the asset basically. You don't participate in the life of the company. With this token, with the possibility to use the asset is a completely different story. And if the asset is an asset of a famous sportsman or whatever, is much better. So for sure we'll have an interest in the future. You have to organize the management. You have to organize because obviously you cannot buy $1,000 in token and pretend to use a villa of $50 million in Beverly Hills or in Miami, whatever. Obviously, everything is a parameter. But if you are a sport or an actor or a personality have a villa or have a yacht or whatever, 10, 20, 30 million, and he want to organize maybe a party, and you can access to the party only if you have a certain amount of token that is the ownership of the asset plus some utility token, you can access. So this will come very, very interesting. So there are some example on the market that somebody did something like this with some, let's say, coin.
there's a study here in Los Angeles just by saying that a certain celebrity lived in a house that it increases the value by X percent. I don't know what that percent. I do know that there was a study of a data point that's why the realtors always like to highlight this is the former house of. So I do know that there is upside at least on the purchasing side.
Yeah, can have a value, but I have a different thing about this. A thought about this is like in Dubai when you have this kind of building with a brand. The real problem in Dubai or with the brand building is if the brand come and check the building and the quality of the building, you have an increasing of value. But there are many, many companies in Dubai that only put the brand in the entrance. They pay 10% to the brand for the fees and they increase the price for 30%. This is not an adding value, it's only a brand on the door. That's it.
That's right.
And the brand, unfortunately, don't check the quality of the building, don't check the quality of the construction or the sales or the development. They only put, end of the month, you have to pay your percentage, 1%, 2%, 3%. So The market is let's say various on this. You have to check and you have to control yourself that the brand it's okay, or the celebrity perfetto, this villa or whatever in your place that is owned by or was the former house from. Yes, but he put some thinking in the project. He developed the project together with the architect and engineer, or he's only purchased a piece of beton on the market and only because he has the name increase the value 30%. So
Good
you
point.
have
Good
every
point.
time probably to understand if this asset have a real value, because we are in the real world asset. So we are not managing coin, but we manage real asset. And real asset, you have to check these yachts have a value or is only a brand. This building have a value or is only a brand. And so if an artist or a sportive or an actor have a value that is tangible and you can see, this is the key. So to have an asset that have a value, not only the name, in my opinion.
Thank you, thank you. And Andy, over to you. So with these lifestyle assets banded about, and obviously you've got a few on your platform, do you think they attract a different type of investor than your traditional infrastructure deals?
Probably. I think that, I mean, going back to the sports example that you guys have been talking about for the past few minutes, I mean, they're called fans for a reason. I mean, that stands for fanatic. Sports fans do interesting things. Their behavior at times is outside the measures of what you think normal behavior would be. I mean, you've seen sports fans buy things that cost way more than they should, but it has their team on it. Maybe it's signed by somebody they like, and the sky's the limit for how that item is valued or what they pay for it. And I think, again, going back to the sports topic, this is what is so great about this industry, is because we're not necessarily inventing any new concepts. We're bringing new technology to concepts and ideas that have been around for a very long time. 1923, the Green Bay Packers offered stock certificates to local people living there in Green Bay. Each stock certificate was $5. That was 1923. None of us are around that. And they keep doing it. In 2021, they did another stock offering because they needed to do renovations to Lambeau Field. If you live in Green Bay, Wisconsin, and you drive by Lambeau Field and you can tell someone, I own a piece of that. I mean, that's powerful. So I do think that along with whether it's sports teams, athletes, there is going to be a line of assets, RWAs, that'll be tokenized, that'll fall under this luxury category, if you will, that will attract a different type of person. But it's really exciting to see unfold. I can tell you that this topic's kind of near and dear to my heart. At TokenShare, we have a 10-year goal that I'm going to let out of the bag now, but we want to tokenize a Formula One team.
Oh,
let's go. Let's go.
That's exciting.
So, yeah.
It'll happen. It'll happen. You'll do it.
Hold on. Let me call Lewis Hamilton right now.
Speed dial.
Coming to TokenShare near you. Oh, right. Yeah,
that would make me do something fanatical.
Lewis, sorry. Yeah. No problem. You want the webinar? Okay, thank you. So yeah, we Juice travels fast. We got
That's
Lewis.
right.
Yeah. Right. So he's been in the news lately anyway, so he's on everyone's tip of the tongue. Look, we've got to make these webinars fun as well. Look, there was another topic to do, and I think we'll probably kill the time. But rather going through questions, maybe I'll just put something general out, because the last topic was about institutional unlock, and we kind of touched it on here, future outlook with an eye on the US. I think one of the biggest questions it would be is, what would it take for a major US institution, pension fund, to put RWAs on their balance sheet? And I think, this is probably a good question just to put out there for the whole panel to discuss.
Well, pension funds are probably going to be the more, or go ahead if you'd like to go first, please.
No, please.
I was just saying, pension funds are probably some of the more conservative allocators, right? And so they want to be extra careful and sure, where they're putting capital or money. So for the U.S., they're going to want absolute clarity, not, and no pun intended, but the Clarity Act is going to be a big one there. Absolute clarity that they're good to go. They have the green light. The SEC is not going to come knocking down their door and whatnot. And that they're not going to lose customers' funds, right? And, these are people's livelihoods. So there's a lot of risk management and risk assessment that goes into these decisions, how they're going to plug in, what stress testing they need to do to make sure everything's, in tip-top shape. So I think that there's still a little bit more, as we were kind of talking about earlier, in terms of needs for integration with their systems and whatever they already work with, their understanding of where they want to allocate capital, and also the maturity of the market itself, right? They need to make sure that they're investing in things that they can also liquidate out of, that they can use, and so forth, in tandem with, their existing strategies, right? So I think, in my opinion, I think there's a little bit more plumbing and pipes to be built out before they're going to come in, as well as on the regulatory side for them to have full confidence to be able to actually, dive in.
Thanks, Jason. Andy or anyone else wanted to jump in now?
I just
Why
No,
do
I
you
wanted
think
think?
to.
Jason nailed it.
Mm.
Go on,
Sorry.
ladies first, and then we'll cover
Yeah,
to the
I
rest.
just it's a really interesting question. And that's like where we're all, I think, heading towards. And I think that we as an issuers, we can also, help for institution to look into the RWA tokenization adoption. And a lot of it comes from just, proving the concept, proving that the structure works, making the operational side more predictable, showing discipline and patience. And I think it's coming. We are in the, infrastructure building phase still. And there's really, if you think of it, it's kind of just started booming. Like there's not that many famous tokenization platforms on the market right now, especially in the US, especially the ones that can offer, global access to RWAs. So yeah, I think it is coming, and I think that it is important for us as an issuers, to do the work within regulations, to comply with regulations, to structure our offerings properly, and potentially prove to institutions that this is where the future is heading towards.
Definitely. And Andy, you were going to jump in as well.
Yeah, just to echo, just more regulation. I think that the companies that are waiting on, a more conservative approach to all this need more regulation in place. And then it also depends on the asset quality. So it's almost like the polar opposite of some of the sexy assets we've been talking about. I mean, now we're talking about self-storage units, parking lots, things are, more of a sure bet, maybe a lower rate of return, but conservative and safer for the people that are investing on their behalf.
Great. Thanks, Andy. Angelo, I think, were you going to jump in
Yeah,
as well?
I think in my case, in the yacht industry, for the institutional is not very interesting. The only point interesting can be for family offices in case, because some family offices manage yachts and super yachts, and sometimes they sell the yachts because it's no more an asset, and they say, no, it cost me too much, and I want to get rid of these yachts, and they sell the yachts. In this case, with this kind of scenario and project, they can, in any case, owns partially the yachts, 25%, 50%, whatever. But with the charter structure and the covering of the cost, this asset, instead of a cost, become a, let's say, low interest asset. But also, what is the good point for the family office is that the owner of the family office, so the family, can use the yachts. And so this asset will be partially chartered and partially used by the owner of the family office. So in that level, until that level, probably can be something interesting. So a family office, for example, can buy tokens of 3 different yachts in 3 different places simultaneously to allow the family to use the yachts in 3 different places, maybe 2 weeks in Dubai, 2 weeks in Monte Carlo, and 2 weeks in Palm Beach, for example. And they don't own the asset, they don't have the stress and the headache of the crew and of the maintenance. This can be something interesting also for the family offices, in my opinion.
Thank you, Angelo. Look, we are running out of time, so I'm just going to kind of go through our closing remarks, but I see a number of Q&As from the audience, and no way we can get through that. One of the audience members, Phil, is Jared. Apparently, he's for full disclosure, he's a reporter reporting on this webinar. That's great. Please discount the Lewis Hamilton quote. He wasn't actually on the phone. That was Lewis. This is actually him on the. Listen, we'll speak later.
Conference me in.
Jokes aside, but I think Jared, probably worthwhile, Phil, catching up offline. So Jared, if you touch base with Phil, you could shoot him an email. He'll give you kind of a live def interview.
Yeah, and on that note, and I'll announce it here. We're going to start doing a weekly Q&A because it's just impossible for us to have enough one-on-ones with folks. Plus, it'll help you qualify your project, get a better understanding of how you can work with us. Because again, the inbound is just monstrous, and we can't get to everyone all at once. So I'm going to start doing a weekly overview of DigiShares, kind of high level of markets, and then handle live Q&A so that you can get your questions answered in the same format right here on Zoom. So make sure you apply to our newsletter or subscribe to our newsletter, and we will get you the link so that you can attend those weekly webinars.
Awesome. You heard it first. Phil coming to a screen near you very soon. So just as we close out, it'll be great to go through the panelists today. Well, first of all, just want to say thank you very much for all of you attending. Jason from RedStone, Roza from TokenLand, Angelo from SGM Digital Assets, obviously covered the whole yacht piece. Andy from TokenShares, really appreciate the time. It's been a good 2 hours actually talking. Really enjoyed it. Always enjoy getting in-depth talks about RWAs as well. And if I gave you guys 1 minute to sum up everything and to leave the audience with anything they may wish, or to go and plug ahead your platforms again and what you do, feel free. So start off with Jason, RedStone.
Sure. No, again, thanks for having me and us, here on the panel. Great conversation and a lot of intriguing things happening in the tokenization space, especially now where momentum is actually building up as opposed to, years ago. And every year I remember we were all saying, this is the year, this is the year. And I think 2026 actually is, again, with clarity and the US opening up a lot more. With that, let me know, email me, at Jason.Barraza at RedStone.finance for anything that you could need. I'm happy to always hop on a call and chat tokenization. Again, we're more of a data oracle, so we're kind of asset class agnostic, and we kind of more so work out with whatever needs you have. For anyone that's listening that's maybe newer to the topic, would highly recommend, self-educating as well as hitting up anyone really here. I'm sure we're all available. Because it's something that will impact either your existing assets or if you're an investor, how you invest in the future and so forth. So thank you, DigiShares, for putting this together. Education is key.
Awesome. Thanks, Jason. Roza?
Yeah, thank you very much for allowing me to participate. I did learn so much more new information. Actually, we in TokenLand never discussed adding utility token. So this is going to be my homework after this presentation, go and see how else we can better TokenLand as a platform and maybe add some other features that might be interesting to investors or enable some type of different participation and not just in a tokenized real estate. But yeah, TokenLand is all about reimagining access to real estate. So if anybody's interested, follow to the tokenland.org website and reach out to me if you have any questions. I would love to chat and answer more questions. Thank you.
Thank you. Andy?
Yeah, so thanks again so much for having me. I would echo what Roza just said. It's been wonderful as I've gotten to learn over the past couple hours as well. We all work in this industry, but anyone that tells you that knows everything about it is lying to you because it's changing every day, which is part of what makes it so fun. But at TokenShare, the fundamental value that's driving us as a company is empowering people and allowing people to have access to purchase fractional ownership of assets that historically they haven't had access to. And that's really the bottom line, is we feel like it's a win-win-win. And the more that we can come together as a world, as a community, as investors, and that comes with power. And we just are so excited about what the next few years are going to bring. Check us out at tokenshare.io. If you'd like to email me with any questions or start up a conversation, my email is andy@tokenshare.io. But thank you so much for having me.
Appreciate it, Andy. Angelo as well, final words from you.
Thank you. Thank you for inviting me here. And yeah, I hope this here to develop the complete project and to show maybe in some next webinar the complete project full running here in America. We are here also to help people that want to tokenize the single yachts to have some different liquidity, or they can contact us, or to create the full structure from the fund of investment to the tokenization of the shares and all the management on the yachts or on the token. This is so that you can find me at ac@sgmdigitalasset.com. Thank you very much.
Thank you. And I think most of the panelists have popped their email addresses in the chat as well. So feel free to grab it from there. And look, if you miss it, contact Phil at DigiShares. He'll pass the relevant details on. Look, so just to wrap up from me, as Phil mentioned, he's going to be doing some sort of overview on a weekly basis, podcast style. So please follow DigiShares, the socials, register. And then for any other webinars this year, carry on following DigiShares. What's the final takeaway from this? I think utilities came out a lot about in the RWA space. This is really going to be kind of driving it forward. Obviously, in the US, things are changing with the administration. Everything is geared towards RWA. We hear crypto, but RWA is really coming to fruition. So look, just want to wish everyone a good evening, good morning, good afternoon, wherever you are in the world. Most of us here are somewhere in the Americas. So thank you very much. Goodbye from El Salvador and goodbye from my colleagues and friends over in the US. Take care all.